traders. Mark here from Flipside Trading. It is Sunday, May 31st. Hey, sorry for the delay in getting this out, but doing a little housekeeping on the computer as it's the first of the month and learning all about new things around disk partitioning and et cetera, in order to keep things running. So here we are. And today we want to talk about the central banks, right? We always had the adage, don't fight the central banks, because they keep booing the markets regardless of what we see or feel from an economic standpoint. That doesn't matter. Remember, the markets and the economy are not 100% correlated. So what we saw is that the Bank of Japan had its second $1 trillion injection in the same month. Basically, Shinzo Abe was hearing from his constituents that they weren't getting enough, and so he doubled down. And notice that I use the word injection and not stimulus, because at this point in time, this is purely injection for support. This is not a stimulus package for growth, right? This is a safety net. Well, on top of that, the European Central Bank, they also announced a $750 billion package. And the Fed, Jerome Powell, has definitely reiterated that they're willing to fire and shoot at anything, anytime, anywhere. It's kind of that fire aim ready, adage in the bottom. And of course, what's happening, it's pushing the markets up. So let's take a look on that and see where the markets are headed. There's still a lot of momentum upwards, but there are some near-term targets. And I think, tightening stops is something definitely to consider. In addition, there are some things that are not moving in the same direction, or if they are a little bit slower and they do trigger, they could be confirming signals. So without further ado, let's dive in here on the charts. So the first thing we talked about is, remember we talked about Japan, the $1 trillion injection. So here is the Nikkei, right? Their futures. You can see here that when they made the announcement that we're going to go ahead and kick that in, it basically moved this whole market up, 7%. And of course, our markets are like, hey, if central banks are, in the ball game, should we say, then that's probably going to happen for us as well. So if we take a look at the cash SPX, or S&P 500 on the daily chart here, and we pull it up and let Thinkorswim do its thing. And what we're going to see is we've, definitely moved above, right, the 200-day moving average. We've come back and we've tested a few times, but you can see there's a lot of confluence of support here. We have the ADMA, which is the yellow line. We have this former trend line here on this widening megaphone channel. And we have the 200-day moving average. So there's definitely some key support. So if it breaks this cluster or confluence, then I would expect to see, a pullback, potentially to the 21 EMA or maybe even the 50, okay? But really, where can the market go? Well, the market can go up here to the 78.6 extension, right? Up here at this kind of, 3144 level. And that ties in really well with this confluence, right? From a technical standpoint of this price action, tops and bottoms coming right across. So that's the area to kind of look at. We have momentum still moving in the same direction. We have a squeeze. It's fired off. It's usually good for 7 days to 9 days. It's about 5. So I think there may be a little bit left. And so it's definitely something to consider to see the markets grind higher unless we start breaking this support like talked about. All right, so that's the one index, right? Let's take a look at the NASDAQ, because the NASDAQ, of course, is just going crazy. You can see that we're in this channel, and again we're following the 8 EMA up. We have a price resistance here that we would need to see us break before we can continue upward. And where we continue upward, the next target is at all-time highs. And you can see that if we move up here, that still would be within the channel to get to this 9,800 level. Is it going to get there in a straight line? Probably not. That's not the way our market moves. Will it come up and back and forth a little bit? Maybe test this ADMA, maybe even test the bottom of the channel before going up? That's a definite scenario. As long as we're within this channel, again, we have some positive momentum here. the market definitely has a bullish sentiment to it at this point in time. Now, not all sectors of the market, have this bullish sentiment. One of the key areas are the small caps. So if you look at the rut, right, and look at the small caps, we're definitely still within this channel, but remember, we're still below the 200 moving average here. One of the key things that we have, and you can see, is that we have this support level right here. And you can see that we came up and touched it. Now, once we came up and touched it, we came all the way back down to the ADMA and still stay within the channel. So if we stay within the channel, then I can see us bouncing up and then going to retest the 200 moving average. And that's kind of the same magnitude move as we would see in the NDX to reach 9800 and the SPX to reach the 78.6 retracement. But if not, if we fall through this channel, okay, then I would definitely be watching to see whether or not that support on the S&P 500 holds. All right. Now, there's another key area we've always talked about besides the small cap, and that's the financials. Will the financials, are they ready to make a move? Well, the answer is yes and no. The good news is we've broken out of value, right, for the overall month. We're sitting on top. Beginning of the month of June, we'll be on top of value. Again, ADMA is above the 50. The 21 still to cross to really give us a pull, I'll say, bullish moving average stack. But we do have, right, we do have positive momentum. But the key thing here is we have this resistance on this gap. Okay, so the thing I would look for, if we can go ahead and begin to close this gap, this will provide the confirmation that the SPX and the NDX are going to move higher. Okay, so that's one of the very key things that we need to look at. If we start breaking down and come back below and maybe retest this top of value in the 21, then I think we're in that scenario where we're going to bounce first before we go back up and look to see if this holds. All right, so that's a very key level there, kind of that 22.35. The other area that we kind of need to look at, of course, that's facing the same type of, should we say, gap is oil, right? Oil is an indicator of the world economy, right? As the world economy moves, if we need more energy to create electricity for our factories to hum, for our transports to move, and our planes and ships to keep going, then we definitely have that. But you can see that we have a decent uptrend here. We're getting ready to break this, okay, June 1st, if you will. Top of value. We're trying to make a decision, but again, we have this gap. So again, if we can see the financials and oil kind of break that gap, then we're adding confirmation for the markets to go higher. If not, if we hit the top, come back down here to the 21 and the 50, then you look for a potential bounce up or break all the way down, right? But these are the scenarios that we're looking at. And finally, the other key, should we say, commodity indicator is copper, right? Because copper is all in your semiconductors and your engines and your house wiring and everything else. So you can see that we've had a squeeze. We've kind of made this little bounce. We're kind of moving up here. We have a little bit of resistance right here. So, it's kind of it's not a very good drawing, is it, from a straight line perspective? So let's actually pull it back a little bit further. Our drawing tools are being a little bit finicky today. So we come back here, right? We're looking for this. Again, if we break, then we have really, really great confirmation that we're moving up. Okay, so those are things to look at. Now, once we get there and get to these highs, the question is, what's going to happen? And so there are some definite signs we want to look at here to say that, as we move up, I would definitely be excited about it. Make your money, but make sure that you take profits and or consider tightening stops, because if we go back and look at our dashboard, we'll get some confirmation of, number one, right? Here we are, right? This is the NYSE, the advanced decline, right? Here's our Keltner channel right here. You see that we've broken through it. broken through that Keltner channel. Here we go. Right, moving up, so it's definitely positive. Right down here, right, you can see the SPX is confirming as we are moving up. Okay, good. Let's see our look at the next piece. Right now we're looking again at the New York Advanced Decline, and it is above the 50-day moving average, and we have broken, right, this little trend line that we talked about. It says potentially go higher. Maybe it hooks down and hooks back up. Again, we're above the 50 here. Again, saying that we have more or less a bullish case. What we really want to get down to here, okay, MACD, the same thing. We talked about our MACD. We have our cross, our positive momentum. We have it here, and you can see it here. It also says potentially that things are moving higher. Okay, here's what I want to get to. One of the things is that we know the NASDAQ has kind of been, besides the central banks, has been the engine. And what we can see here is that what we're looking at is kind of the bullish percent index. So it's kind of like, how many stocks are above their 50 and their 200-day moving average is kind of put together. But you can see here that we have this divergence, and you can see when we had that divergence, what happened here. We're starting to see a little bit of a divergence here. So we really want to watch this to see if we can break this level. And if we break this level, then that'll confirm we're going higher. But if not, okay, if this starts to, if the NASDAQ hits the all-time highs and this thing looks like it's going to start to roll over a little bit, okay, definitely beware, right? Tighten things up. Don't be greedy. You can always get back in, right? You're only a commission charge away. And these days, commissions are basically free. What we're kind of from the world economy perspective, all right, this is the BDI, this is the dry shipping index. Remember, like 70% of all goods should I say, move via boat or ship transport, right? We're kind of hooking back down. We like lower highs, lower lows. So this is going to be a little bit of a drag. Again, can it overcome central banks in the current momentum? Probably not, but if we hit that high, I would definitely be, taking a look at this, okay? And let's see, I don't think there's too much more here. Oh, last thing I want to talk about was the VIX. So if you look at the VIX right here, and you can see that we're in this consolidation, and we're going to be moving up back and forth. And as we move back and forth through this, man, the swings that we're going to see are wild intraday. So if you're just long-term investing, you could probably ignore those a little bit, but if you're with us and following or doing any type of 11-hour option credit spread, and I'll talk more about that in a second, we're seeing some 30-point moves in within 10 or 15 minutes that can really change gamma, change delta, and then your overall the overall cost of those options. So we are much more in the process of putting them on during the day, taking half profit off in the evening, and then letting these things run and not getting caught. So we're in this kind of a little bit more of a hyper management stage to see that. So again, if the VIX stays down here or breaks lower to this all-time low, this would then support the markets going higher. If we kind of bounce here and move up, then we talk about the retracement before we have a chance to move higher again. But let me give you a quick look. Let's go back to the charts one more time real quick. And I'm going to go ahead and go back to the ES. And I'm going to go back to what I trade on. This is a 1,000 tick chart. And it'll take a couple seconds to load. Remember, a tick is every time that there's a transaction that the ES is bought or sold. So I'm going to squeeze this down just a little bit. And I'm going to move this back to, let's see, let's get to, here's a 29 up. This is one thing about Thinkorswim. It just takes so long to calculate. It keeps kind of moving around a little bit. So we'll kind of go back slow and see if we can get to where we want to be. So, see, here we go. It is one of the most frustrating things about this platform as a charting platform. So, okay, let's take a look right here. So take a look, we're at 30.26, you can see it's 12.33. So now you can see from 12:33 to 12:50, or 12:53, right? We're talking about 20 minutes, and in 20 minutes we move down here, basically, you know, a good 30 points. All right. On the converse, here we are, 12:53, right? We're at 3,000. Let's call it round numbers. Here we go. Right? Less than 5 minutes, we moved up 40 points. Unbelievable. Okay? So this internal volatility is just crazy. We go back a little bit further. Okay, here's the overnight session. Here's Thursday. So we're long on 29.60, and we're thinking that we're sitting well, and all of a sudden, here we are hitting here at 30.60. We have a 29.60 put credit spread on, and look at the time here. It's 1:15, and holy smokes, an hour later we dropped from 60 to 30.20. We dropped 40 points. So, you know, given those types of move, we are making some very, should we say, I'll call it risk management judgments. Even though we said that 3,000 was our overall, you know, line in the sand as far as, you know, when to get out, we're saying, hey, if we're here, you know, we're still profitable, we're going to go ahead and take at least half off in order to reduce risk, because this does not look like a liquidation break. This is a liquidation break, okay? If we were here and then retraced up, that's a liquidation break. But we actually trended, right? Very, very, you know, here we go into a lower high, lower low, lower high, lower low. So when the market starts trending like that with conviction, that's when you want to go ahead and manage your overall positions, especially, you know, we're trying to be long in the market, but, you know, given everything that's going on and all the headlines, especially with China that were coming up, you never can be too sure. And worst comes worst, hey, so what if you close this break even? Okay, let's assume that happened. Well, we held the rest the next day, and, you know, in the morning, right, you see the night session, we came all the way down, gapped the new low, but by the time we opened, we were pretty much where we closed, right around, you know, 30.20, and the market, you know, really kind of, you know, hung with us for a little while, and then started to make its move. Here we go. And of course, you know, here's our 3,000 level, but since we only had 5 contracts, we knew that we had here a virgin point of control. We expect some snapback, and of course we got it. Okay, guys, that's all we have. Remember, this is for educational purposes only. You know, good luck. We know that the market has propensity and momentum to be bullish, but watch out for the financials, the small caps, oil and copper. Make sure that they confirm the move, and you should be in good shape. All right, enjoy the rest of your evening. Catch you on the flip side.